Welcome to the TokenClan channel. Hi, I'm Warren, and in today's episode, we have a special guest today. He's a personal friend of mine. He's Seeni Jay G. I heard about him. He's a longtime friend of mine, and I really want to invite him into TokenClan show because late last year, I found him on a show on 968 Oli Singapore Tamil radio station. By the way, many wouldn't know that this station is the only Tamil radio station in Singapore and has been airing shows since 1936. So it is like the national radio station of Singapore for the Tamil audience. And what I'm so impressed is that it's talking about cryptocurrencies and Bitcoin. And this is something that I'm very passionate about. And TokenClan has been talking about Bitcoins and a lot of all this DeFi stuff lately. And that's why immediately after Seeni shared with me that he's featured on this radio station, I went and take a look at the podcast and I immediately came with this idea of inviting him for TokenClan. A brief introduction about Seeni before he speaks with us. So first of all, he's managing a multi-million portfolios. He's a fund manager. He's a treasury operations, and also he deals with blockchain development. He specializes in currency-based funds. He's involved in currencies market since 2003 and now oversees a trading team that develops a diverse range of proprietary trading systems. On the blockchain development, he builds a fintech service for remittance, work with centralized and decentralized blockchain frameworks to serve retail and OTC crypto traders. So in his latest project, Seeni has deployed a fully automated AI-driven trading engine which capitalize on trading efficiencies in the crypto markets. This is delta neutral and non-speculative, and which has done well in all market conditions so far. This is something that is very interesting to me. This requires a lot of experience and deep knowledge in the fields that he is doing in this emerging industry, cryptocurrencies. And whatever he has done for the cryptocurrencies market, this has been proposed to move into an institutional space in Singapore under regulation. So with that, right, I really want to welcome Seeni. Hi, Seeni.
Hi, Warren.
Hi.
How are you? Thank you for having me.
Yeah. So I did a very brief one. Maybe you want to talk more about yourself and then what you do in the cryptocurrencies market and blockchain development. And in my opinion, you have a very, very powerful profile, especially our fund managers, and you deal with cryptocurrencies. That's amazing to me. And please share with us and also share with us your knowledge.
Thank you. First of all, Happy New Year to you. Happy New Year to the audience as well. Thanks for having me on the show. Actually, the introduction you gave of me is quite detailed already. So I'm happy to share with you more about the crypto side of the experience and what I've been doing in the last couple of years. So I'm predominantly from the capital markets. I trade in currencies. That's how I've been in the past 17 years now. It's a long time already, I feel. I've been doing it in different roles in that space. So in 2014, 2015, I got exposed to Bitcoin. And I didn't take action then, which I regret now. But it was something that, everybody was introduced to something that they felt, that is too good to be true. So what the experience was is that I was in Surabaya, I was in Indonesia, and one of my sales associates had an office there. And after we've done our meeting, we walked by his rooms. There's a big office with many rooms, and then there's this one office that you're passing by, and he said, "Let me show you something." And he opened the door, and then it was so hot. The room was hot, right? And there's so much of equipment lying around. It's just one big wired mess. It looked like a network center to me. That's all I could visualize from that. And then I was like, "What is this?" And then he said, "This is I'm doing a Bitcoin mining here." And I'm like, "What is that?" I'm like, "I haven't heard about Bitcoin. I haven't heard about mining. I heard about gold mining, oil mining, and all that. Now I heard about Bitcoin mining, right?" So it was a bit of too much unknown, you see. And then he said, "Can you put some money with me? We'll do this together, and then we will share the rewards of whatever the mining output is." So I couldn't grapple the concept. He said, so I asked him, like, so these computers, they work for you. They give you something called Bitcoin, and then you take the Bitcoin and you sell in the market and you make money. Is that how it works? And he said, yeah, that's pretty much it. And then I was like, nope, I'm not getting involved. I found that something was wrong, and I didn't get involved, and I totally regret that until today. Because at that point in time, I think he was making something like 8 to about 10 bitcoins a month, based on that kind of difficulty and the kind of output. Then, I mean, that's impossible now, let alone mining for that matter. So that was how I got started. And then in 2017, during the ICO euphoria, that was the mania that was going on. That was when I really got interested. I started getting involved. I started taking a look at it. And then we did some projects in Ethereum mining. I didn't do Bitcoin mining. It was too difficult by then. So we did Ethereum mining. We got into a few ICOs. And then fast forward a year later, we were doing a consultation for traditional companies that were wanting to get into the ICO space. I also had I was part of this team, and I also had two cryptocurrency exchanges in India, which was purely a order book model. That was that. And then fast forward 2019, the slumber happened with the crypto market, and then everything went quiet. 2020, things started happening again. 2020 was a bit exciting because everybody kind of started having the vibes of crypto again. Unlike 2017, which was purely driven by speculation, 2020, I feel, at least from my perspective, it was driven more by people really wanting to know what is cryptos and trying to understand it a bit more better, I feel. And then in 2021, it's just bang, right? Just boom down Charlie with the new year happening. Everybody's like so happy New Year. First time the New Year, the word happy really makes lots of sense because it's really Happy New Year. So that was really fun. That's pretty much my experience in this space so far, Warren.
Okay. So in your opinion, right now, let's get into the main content of this webinar. Before I do, I want to make sure that the audience know that this is completely an educational content relating to Bitcoins and cryptocurrencies in general. So by all means, don't anything that we say here in this talk, please do not constitute as financial advice. Okay, now let me quickly get into the list of questions that I wanted to ask Seeni. And what are Bitcoins and cryptocurrencies to you, to put it very simply, in your opinion?
Okay, if you ask me in a very, very fundamental basis, what exactly is it? I mean, like, everybody's talking about it as some digital asset, as the next best thing to gold, they're comparing it to the internet, so far and so forth. But let's put it in a very simple term. What essentially at a very molecular level, what exactly is it? To put it simply, cryptocurrencies and Bitcoin and all that for that matter is just a data block. It's purely a data block that is being traded, right? We as in the market, have given it value, have given it a perceived value, have given it form, have given it an applicational context, which is what that gives it its coveted status today. But if you look at it, essentially, it's just a data block, right? And just like we are sending text messages online, we're sending songs online, we watch movies online, it's the same thing. Instead that I am now sending you a data block, and then like you would ask me, so what's the big deal, right? If I send you a movie clip, you have the movie clip, I have the movie clip, what's the big deal? The only thing that's different here is this is unique because of distributed ledger technology and blockchain. The data block that I have is only unique to me. It can never ever be reproduced, and it can never ever be given to you while I have a copy as well. That is the beauty of why this data block or this coin or this cryptocurrency is so special. And because of the scarcity that it comes with, especially Bitcoin, because of the scarcity it comes with, there's a perception that, hey, this is going to run out. This is going to be more and more valuable in the future. Because of that very single notion, that's why it is so expensive, and it is so everybody's clamoring to go after it. So to put it in a nutshell, it's just data blocks, but because of that ecosystem and that environment that we have built around it, which is why it's so expensive today.
You talk about scarcity, and there is predominantly Bitcoin. Am I correct to say that?
Yes. predominantly Bitcoin is the mother of Bitcoin, as I believe, and Bitcoin has been the driver of all the attention that has been getting to the cryptocurrency world as of now. There have been a few clones of Bitcoin, and they have tried to fork Bitcoin as well. There's been different versions of it as well. But if you look at it, if you talk about scarcity and how something that's been having a finite supply can drive the price value and other applications, which I'll talk about later, then only purely Bitcoin comes to our mind.
So is scarcity the main leading factor behind the recent Bitcoin price rally to all-time highs weeks and weeks that we have seen so far in 2021?
Yes, Bitcoin by its essence, by its value itself alone, scarcity, yes, that is driving the value of it, yes. However, the environment around it has changed quite a bit. If you were to look at what happened in 2017 versus what is happening now, and it's going to happen in maybe the next 1 to 2 years, the environment has changed quite a bit. So let me show you something that I have put together. So do you see this squiggly line curve on your screen right now?
Yes.
Okay. So excellent. So this is a very simple correlational chart I want to share with you. Notice that Bitcoin is not here, but you'll understand the gist of where I'm going with this very soon. Now, there is four curves, as you can see. We have the S&P 500 index, which is the topmost red line, and then we have gold, which is green in the middle, and then you have the US dollar index, which is the gray line, the third from the top, and the last one is the VIX index. Now, the VIX index is what we call the volatility index. The volatility index basically measures change of price over a period of time, and it's basically to find out the exchange of hands, the exchange of contracts in a specific period. So when volatility gets high, on the institutional side, we infer it as the fear index, as the fear level is high. We call it the fear index because of the very reason. The more high the volatility, the more high the VIX index, the more fear there is in the market. So if you look at this VIX index at the bottom level, you can see that it has been on a downwards movement, which means that the fear level is going down, that the market is getting kind of somewhat normal, somewhat comfortable, and so on. And notice on the extreme flip side, on the other side of the curve, you have the S&P 500 index, which is going on a slightward inverse but upwards slope, which means that when fear level goes down, when the VIX index goes down, the equities markets tend to do better because they are where people start going for risk. People start going for yields. They're looking for profits, right? So they go into the equity market. Now, on the inverse, let's look at a period where the VIX index goes up. So this period you see here, as you can see, this period you see here, the VIX index goes up, which means that the fear level is going up in the market, and therefore you see that S&P 500 index is coming down. You see that? And on what is correlation with the fear index is gold. As you can see in this period, gold is now on an upwards movement. Now, this is very, very traditional. This has been happening for God knows how long. It's just the way the market moves. And this has happened. This affects commodities. This affects the gold. This affects the dollar index, and so on and so forth. Now, when we're introducing a Bitcoin into the equation, Bitcoin is seen as the digital gold. A lot of institutional players, a lot of market experts, some of them being in the market for too long, refuse to accept Bitcoin as the replacement for gold. I wouldn't say it's a replacement, but at least I would say it's another alternative to gold as a digital asset. Now, that has been the resistance in the market for the last couple of years. Only in the last 1 year or so, I would say, and that they have started now looking at Bitcoin as another version of gold, purely for the aspect of a inflationary hedge. So inflation, I'm sure most of you already know about it. This is another chart that I pulled out for you guys, and you can see that this is from Bloomberg. For the last 100 years, as you can see, the dollar has completely just been derailed, right? It's just decimated, if you ask me, because we're talking about 90% purchasing power erosion of a reserve currency of the world. It's a trading currency of the world. That's just quite a shame. But that's how inflation is. That's how market economics works. And this is inflation that's in our face because it happens so subtly and it happens so in such small increments over our everyday course of life. We don't see the impact of it as much as you see in this chart. If I were to tell you that whatever you have today is going to be worth, whatever money that you have today is going to be worth, say, 10%, 20% less in 10 years from now, nobody really cares, right? But if you see this in the chart like this, as I'm showing you, over a 100-year period, you've lost over 90% of your value. Everything is now costing 9 times more expensive. Then it kind of hits you because that's quite a bad loss in value. And this is what's happening right now. And I believe that during the COVID pandemic, which really hit home like maybe March, April in Singapore at least. Warren, wasn't that the period? Yeah, during the lockdown. Yeah, so
Yeah.
it was March, April, and then after then is when the printing press started going crazy from the U.S. administration. So it's all a couple of events. So first is definitely inflation. The inflation is kicking in, and it's getting more and more rampant with Biden's administration coming in. Second is halving. Halving happened in May 18th, if I'm not wrong. Let me look at that. Yeah. So I was quite lucky. I had a chance to do a presentation, a webinar for another trading community in May 14th last year. And then it was just before the Bitcoin halving process. So I was telling everybody, this is the time, go and buy Bitcoin, do something about it. But I don't know how many people actually listen to that. And
that was what's the price at that time during halving?
It was $9,300.
Okay.
Right, and then I did another follow-up presentation, which was on the 27th, and then it price dropped then about $8,800. So everybody was saying like, hey, halving just happened, right? Like 10 days ago. How come the price went down? And I was like, no, it doesn't work that way. You got to be patient. And Warren, we've had conversations before on this. We even discussed that it takes about 6 months or so before the actual effects kick in. We look back at all the previous halving cycles. After halving happened, it takes about 6 to 8 months before the actual price starts kicking in for the effect. So fast forward, we then came to October the 24th, which I had when I had another presentation. I took this chart then, and then that was already $12,933. So it was about 5 months since that. So you can see that the price is starting to kick in already. And then the last presentation I did was on before the new year, was November the 14th, was $16,000. So right now when you look at the price, it looks really stupid, right? I'm like, how come price is like today's what, $48,000?
Yeah.
Everybody's like, wow, I wish I could get it at 16,000 or 10,000 for that matter. But this is the human mentality, right? I mean, so when I got into Bitcoin, I got in. So I was telling you guys I was late, right? I got into Bitcoin 2017, 2018. So I got in when Bitcoin was already $10,000. It's a shame, but that was how late I was. So I got in at $10,000, and then it started dropping. So I bought again at 8,000. I bought again at 6,000. I bought again at 5,000. And I think after about 4,500 or something, I didn't buy anymore. First of all, I was out of capital. I put in so much of money in that, and I didn't have enough money anymore. And once it broke down below 4,000, I was honestly very scared. I mean, to be honest, I had a few sleepless nights because I didn't know if this will become zero, to be honest. I mean, people can talk about all they want now, and everybody could be like telling you that, hey, I saw this coming 10 years ago. But to be honest, 2 years ago, if you told me about it, I'm still doubtful because it was really quite scary. Like at the lowest price, I think it went like 3.5 or 3.6 or something like that, US dollars. So that was really quite frightening. But since then it's recovered. The last few months has been just amazing, right? It's just been crazy. So on this particular call that I had in May, I told the audience that Bitcoin will go back to the previous highs, $20,000 by end of 2020 last year. I mean, in my mind, I knew that it would happen because all the elements were there. Halving was happening, the printing press was going on, dollar was losing its value, and everybody was looking for things online because of being locked at home. I knew the cryptocurrency trading and all kinds of trading for that matter, home-based businesses will start improving. The more adoption will be there and so on. But never in my wildest imagination I knew that the price would go up as crazy as this, and in such a short period of time, right? So within like this November, like November 15th, we're looking at now, and like within the first week of January, we already had like $35,000. That was like 75% more than the previous high already. So that the pace was insane. That ascent was really frightening, and it's still holding on. God bless, we don't know how far this would go, but it's really, really interesting times that we have now. Sorry, Warren, I got a bit carried away.
So you talk about the printing of the fiat currencies, and you talk about the Bitcoin halving that are the leading factors that contributed to this recent rally of Bitcoin.
Yeah, sorry, I have one more thing I want to share with you. If I may, let me just get the chart correct. So when was US election? It was 3rd of November, 2020, right? Everybody knows about that. But I just looked at this chart and I found it really interesting. This is the price of Bitcoin, right? This is 3rd of November. We are at this point here. And after that, it just broke on a crazy frenzy rally. Can you see that? It's just been parabolic from then. And true enough, Biden's administration is coming in with such heavy plans to stimulate the economy. The kind of stimulus checks that they are proposing, the proposed bill program that he has is $900 billion. What that was expected to pass this month. So again, it's the printing press going on overdrive. Is it because that the market saw that this is happening, and that's why once Biden came in, is there such a frenzy in buying cryptocurrency, or is it just purely coincidence? I don't know, but this is something I found very interesting. I wanted to share this with you guys.
Then my next question will be: you talk about the leading factors to the recent price rally. I also want some perspective from your side. Is that we are beginning to see listed companies like MicroStrategies, Michael Saylor, even Elon Musk putting funds from their businesses, companies, or corporate treasuries into Bitcoin. What are the reasons? Why are they doing this? Are they saying the same thing as we do in the crypto community?
Okay. Let me share this with you where I saw this amount of crypto holdings Bitcoin holdings in publicly traded companies. This has changed now. This was maybe about 2 months ago. Right now, Grayscale is holding about 570,000 Bitcoins, if I'm not wrong. So it's about 30% more already. I don't know about other guys, but Grayscale is like the poster child right now of all institutional level crypto holdings. So I'll take them as a leading indicator. Now, this is insane, right? This is why it's 2021. This bull run that we're having is so different from 2017, because 2017 it was lots of retail money coming in. Your moms and pops, your guys who are trying to make this next money making scheme. Lots of scams, lots of investment programs that were born out of that. Small companies maybe got into it, but that's it. You never knew of a public listed company, or even a securities firm, or even a large scale national level firm getting into cryptocurrencies. But right now, wherever you turn, whatever news you hear, it's all about the big boys coming into buying of crypto. This gives me great confidence that the current run we see will be a bit more stronger than what we have seen and what we have seen in 2017. That's the plus sign of it. The downside of it is, which my own personal fear. I think of all different outcomes, and I personally fear that the companies will get too powerful, and that this gives a concentration risk. You know what I mean? So a lot of companies that can get together at this kind of size and this kind of scale, if they decide to band together and syndicate together and just dump it or hold it to the moon, whichever it is, then the concentration risk is very high. This, I feel, goes against the fabric of decentralization, goes against the thought process of having good and equal opportunity for the common man. That, I feel, is the downside of this kind of institutional level buying. Anyway, back to the question, is that why is this happening? So a couple of things. Again, everybody's looking at an inflationary hedge. Most companies that are buying into it, especially MicroStrategy and Grayscale, they're doing it from an investment perspective. Lots of sectors have already kind of dried up. The equities market is way too overpriced now. The PE index for the equities market is grossly overvalued. And the bond market is drying up. Fixed income market is drying up. Property market is getting more expensive. Commodities market is getting too inflated as well. So I wouldn't simplify it like that, but in a general wind of the investment space, there isn't much of exciting investment asset classes to go to for these investment guys. Yes, this is considered risky. Yes, this is much more crazier returns expected than of the previous asset classes that they've never been exposed to. But then again, this is what these guys are for. And you don't see the big boys like, Warren Buffett's coming, Berkshire Hathaway, or you don't see Ray Dalio's firm, these big boys coming in from that kind of institutional investment space. These guys are institutions, but they're not the traditional investors. They are the new age investors. And that's why they're driving these prices up so crazy. And lots of companies, lots of other smaller companies, even like your mom and pop companies, they are buying up Bitcoin just to have some on their balance sheet as a diversification, as a way of holding their cash reserves, just taking a small portion of it, maybe 10, 20%, whatever have you, and then buying Bitcoin as well. So that is pretty much the strong force driving the institutional level buying at this stage.
Oh, one interesting thoughts, because I operate a blockchain smart contract development business, so I definitely have some exposure to cryptocurrencies like Bitcoin. And can I have an opinion from you? Is that do traditional business, small business, not the big boys that we're talking about here, should they look into buying some Bitcoins for their business as like a potential store of value from this kind of money printing? Is that some kind of advice for that these business people can do?
Yeah, the horizon is very important. It's the same thing that happens in the FX markets. People ask me all the time, like, what's happening to the dollar, what's going to happen to the pound, and so on. But it really depends on your horizon. If you're looking at something which you're going to look to capitalize on in the next couple of months, then I would say this is not something you want to get into, because as much as how excited and how crazy the charts have been going up, in one direction only, a correction can be due anytime. So if you do not have the holding power, this applies to individuals also, this applies to companies also. If you do not have the holding power, and if you cannot afford a longer term horizon of say 1 to 2 years, I would recommend that you do not get in, unless you purely want to dabble for the exposure of it, and maybe you want to expose maybe 10-20% of your surplus reserves for this kind of riskier asset class. That's something you can consider, right? And inflation will hit you because some of you might be thinking that, hey, this is happening in the US. It's going to happen to the US dollar. Why do I bother about my reserves in Singapore? Yes, Singaporean economy is handled very well, and MAS does an excellent job of adjusting the bands of how the Sing dollar is strengthened or weakened against other currencies. But let's be honest about it, US is one of the driving forces of the world. It's one of the largest economies of the world. And when her dollar weakens, inflation will hit you one way or another through almost every other aspect that you can think of. And we in Singapore especially, we're an import-driven economy. We don't produce our own goods. We buy things a lot from overseas. So when US dollar is the trading currency and lots of settlements are still being done in the US dollar, will inflation come home? Yes, it will come home. Maybe not to the extent that it will that will hit the Americans on the home soil as bad as it is, but definitely international markets will also be affected. So yes, it's a good way to think about it as a way of diversification for your own reserves, but not too much, and also have a longer term horizon. That's very important.
Wow, okay. That's a very good advice for people who are looking into this, especially now we see so many the news, the traditional media is covering many things like bitcoins and cryptocurrencies in their traditional workflows.
Yeah. Sorry, just add a bit, Warren. In 2017, this Tamil station that you spoke about, right? It's Woli 96.8 FM. It's the only radio station in Singapore. Thank you for the history lesson that it was from 1936. I never knew that. So when they last did a coverage of cryptocurrency on this particular channel, it was in 2017. So it's taken 4 years for it to come back again, which goes to show that right now the on the ground sentiment is hot again. The common man is talking about it, which is why they want to cover it. So everybody now talks about making money and being profitable in it, but a lot of people were burned in the last 3 to 4 years. I know lots of people who went into mining, lots of people who went into buy coins, and then they couldn't sustain the drawdown anymore, and they sold it at like very, very low prices. They had to absorb the loss. I was blessed enough to be able to hold on, but even I was wrong for 3 years, right? I bought in 2017, 2018 until 2020, 2021. I was still wrong. Only in the last couple of months, I've been able to see my portfolio being back in the green. So this is something that we have to accept and something we have to internalize, because everybody likes to talk about profits. Nobody likes to talk about risk. And if you cannot sustain the risk and hold on to this floating losses, then this is something probably you do not want to get into, because it can be very, very stressful for you.
And here comes the next key question. Now, with Bitcoin at the price of 48K US dollars, is it still a good time to enter? And if yes or no, whatever the answer is, can you tell us a little bit how you value this kind of crypto assets like Bitcoin?
Okay. Difficult question again. But the disclaimer, you already said a disclaimer earlier,
Yeah.
but it's purely for only. There is no intrinsic value to Bitcoin, right? As much as a lot of people would hate me for saying this, I probably would get killed if I walk along in the crypto community streets, But it is the truth. There is no value in Bitcoin, there's no intrinsic value. It's purely driven by perception, and that some of you might argue that there's a cost to mining, and the cost to mining gives it its intrinsic value. But hey, again, that's driven by perception, because there's more perceived value, thinking that Bitcoin is going to be worth much more. There's more and more resources being pumped into mining Bitcoin, which then drives up its intrinsic value. So it's kind of artificially supported, if you may ask me. That's my opinion, right? So how do you value this? We're not talking about stable coins here, yeah? Stable coins are stable coins. Some of them are pegged to reserves, some of them are not pegged to reserves. We're not going to have that discussion, because that's purely a stable coin. You're buying it for the reserve value that it backs up. There's no speculative, there's no gain attractiveness to that. We're talking about cryptocurrencies that's value floats, and Bitcoin, Litecoin, Ethereum, whatever have you, we do not know what it's worth. We only predict what we're going to go forward with and what it can be worth tomorrow. And that's purely what is driving this chase in the market. Now, I don't know an absolute answer, but I have done some work on some models that make sense to me, and I want to share that with you. And maybe then you can see that where this would be going, right? So this is what's happening in the market typically, right? So I heard this many years ago. I heard this. I was doing a company event. I think it was 2017 or 2016. I can't remember. I was doing a company D&D event, and we were speaking about cryptocurrencies. And one of the speakers we had on stage that day said this exact same thing that I'm sharing with you now, right? And this is his message, and the words are slightly different. What they shared was, I'm changing my stance on Bitcoin with this post. I was skeptical about cryptocurrency, as it seemed like a financial gimmick. Also because I'm a buff Warren Buffett disciple, I think. That's what he says. Yeah, disciple, and he had different views on it, but not anymore. Not because I understand bitcoins or cryptocurrencies, but I can sense the pattern where the fiat currency will be eliminated by this new format of what we call money. Okay? So this is his view, and this exactly mirrors the sentiment of that speaker that I had many years ago. And lots of people are like this now. They do not understand. They do not believe in it. They just feel that because so many people are doing it, they cannot be wrong. And they believe that because so many people are doing it, this is the sense of change to come. This is a revolution happening. This is where money is going to change from the physical fiat form to the digital Bitcoin form. I mean, yes, there is a nice euphoric feel to it. It's exciting. It's very visionary. But let's be honest, this will never happen. This what you're thinking here, that the old money will get eliminated and new money, digital Bitcoin will come in. That's never going to happen. The governments are never going to let that happen. We are run, as much as you don't like to admit it, we are still run by central government and we're still run by central banks. There is no way decentralization can come in and can take over the world. I know lots of crypto enthusiasts and lots of younger folks feel that this is the way forward, that the world is a mess and that crypto is the solution to sort everything out. It's very simplistic, if you ask me. That view is very simplistic. And I feel that democracy and decentralization in all aspects will be a mess. It will be causing more chaos than good. And certain aspects, we still want centralization. Certain aspects, maybe you can choose decentralization. So this will never happen. But the general euphoria, the general excitement about people going into this digital currencies is definitely going to drive the value of it higher. And I want to answer more specifically to the market cap, right? What's happening with the Bitcoin price value? And I want to relate this back to gold. That's why I'm showing you this chart now. So this was the last high, and Bitcoin is pushing for new highs as we speak, I think, as well. So we are about 10%. We're about 900 billion right now, Bitcoin's market cap. It's about 10% shy of $1 trillion. That's a key milestone, right? So if Bitcoin hits 55,000, I imagine we will surpass the $1 trillion mark. Now, that's Bitcoin's market cap. I mean, we cannot resist speaking about comparing it with gold, because that is the next most easily correlatable asset, which has got proven traditional history, right? So let's look at this, right? This is Jan 13th, 2021. Bitcoin has actually only taken up 2%. Just imagine that, it's 2% of gold market cap. So Jan 13, we were maybe at about $40,000. I don't know the price then, but let's say we've gone up another 20% now. So we are at about 2.5%, 2.6% of gold market cap. So at 2.6% is where we are at $48,000. Now imagine that the Bitcoin will reach 10% of market cap, of the gold market cap, right? That would, in the very subtitle that you can see below, getting to 10% of the gold's market cap would mean that each Bitcoin would cost $150,000. That is quite a figure if you think about it. We are now at $50,000 approximately. So there's 3 times more to go. And will it stop at 10%? I don't know. Because for me, the big psychological barrier is $100,000. So if you asked me this question last year, I would tell you it's 50,000, right? I mean, I've been telling all my guys I'm going to exit it. So last year when we were speaking about it, I was telling everybody, I know this is recorded, so I'm going to go on air with this now. I was telling everybody that I'm going to exit half of my portfolio at 20,000. I didn't do that. the pace that, okay, sorry, man, but the pace that Bitcoin broke through at $20,000 was just insane, right? It's just insane. So I waited for a retracement to see if it would retest the previous support at $20,000. It never did. It never came back to 20,000. It's just been up and away until today. So I have personally put myself a philosophy that I will exit half of 50,000, which is very soon. and push comes to shove, I don't know whether I'll be able to do it, but I'll see how it happens, right? But 100,000 is really, really pushing it. And I feel that that's a big, 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 big psychological number. And market is driven by psychology, right? Market is driven by human minds, emotions, and psychology. There's no rationale to it. So when that happens, things can get very volatile. Things can get very crazy. Will governments step in? Will they say that Bitcoin is illegal? Will they say that dabbling in cryptocurrencies is not advised anymore? They will tax it maybe. India is doing that. China is doing that. Will they say that anybody who gets capital gains in crypto now has to pay 20% tax from such assets? Anybody who's having crypto assets, maybe more than $1 million, would have to declare and would have to file it with the income tax authorities. I don't know. This kind of things can happen. And governments and regulations are the biggest challenge, in my opinion, as far as this is concerned. So I strongly feel that it's still got a long way to go. Some of you might think that $50,000 is very expensive already. Yes, if you're getting it for the first time and you're going to put in a significant amount of earnings into it, please don't. But if you're going to go into that away, $50,000 looks very expensive. But you can buy fractions of it. You can even buy $500 of it. You can buy $5,000 of it. The beauty of Bitcoin is that it's so easily divisible, right? It goes down to so many decimal places. You can't take a gold bar and then break it into two. You can buy jewelry, but if you buy the gold bars itself, it comes in solid packed forms. So it's not divisible easily. So all that gives me a lot of conviction, gives me lots of reason that what we're seeing now is still not the end. And I have a very strong reason to believe that we could be seeing historical numbers. I mean, 100,000, 200,000 is numbers that is being put out in the media very easily these days. But I still feel that it can go a long way, especially the way that the institutions are buying it up. New standards are coming in, new laws are coming in, new ways of spending it is coming in. Sorry, I was just getting carried away, but I wanted to show you this comparative chart. Yeah, it's a bit simplistic, I feel, but it kind of drives the message home of what gold is capable of and what dollar is capable of. So the key points I want to pick up is decentralization, right? Bitcoin does that absolutely well. Divisibility, Bitcoin does that, right? Durability, as long as you don't lose your keys to your wallet, God bless you. You have Bitcoin for life, right? And you can easily transfer it to your kids. It goes for generation to generations. No big deal. Absolutely safe. Inflation resistant, yes. Irreversible payments. I mean, I disagree with that, but then again, there's nothing major about that. Prone to counterfeit. This is absolutely important. The US dollar is one of the most commonly traded counterfeit goods out there in the world. I mean, it's not your Louis Vuitton, it's not your Gucci handbags, whatever. It's the US dollar. It's billions and billions of US dollars which is being produced out there in the market, not by the authorities. I'm talking about the counterfeit guys, right? People who are illegally producing this kind of money, and that's floated into the market. And you cannot do that with Bitcoin. You may be able to do that with gold also, unless you have someone who can assay your gold and value that it's of good value. You do not know, right? I mean, any shiny piece of metal looks like gold to you, but you need someone to verify that this is of certain carat, certain value, and so on. Only then it reaches its value. But with Bitcoin, you don't. It's just that value, and it's an open market. Everybody can value at any point in time. So that, I think, is a brilliant value of Bitcoin. Limited supply, yes, and the practicality of using it, right? I mean, you can never bring gold to a 7-Eleven shop and say, I want to buy milk. That's not going to happen. You can never bring gold onto the public transport system and say, I want to pay for my ride using gold. It's never happening. You talk about something that's been there for decades, even maybe if not for centuries, and it's not that easily tradable. Whereas here, you can plug in Bitcoin or any crypto for that matter into your mobile phones. You can spend it with a debit card, and you could pay any merchant, even right now on the streets. So that, I think, is an amazing application of how Bitcoin and cryptocurrencies are able to be used in everyday life. And that by itself is a great reason why you want to hold cryptos more than you want to hold gold. And that itself is another proponent, I feel, that will drive the value of Bitcoin up. Practicality, transparency, traceability, theft proof. Yeah, that's all that. Shininess is nonsense. I think that one is just the space in the table. So as you can see, there's so much of plus points with crypto. And I'm sure that after you're going through this table, you'd have thought of certain things that you would have not thought of before as well. So putting all this into context, digesting the positive sides of things. And I feel that people haven't really driven home the value of cryptos. And one last one I want to show you before I finish this question, but this is absolutely important, and I feel that this is key to where we're going forward with this technology. Okay, so again, back to the question of how far do you think the price would go with regards to crypto, right? This is an S curve. This is adoption by the common man. Major technological trends in the world, as far as mankind, at least notably, has seen in the last hundreds of years. What have we gone through? How long has it taken for such technologies to emerge and become part of our everyday lives, right? So if you notice, this is the blue curve here. That's your radio station. That's your radio frequency, right? It's AM radio, and then with FM radio and so on. So that took in 1920s, and then it took almost 20, 30 years before it peaked right here, right? As you can see, it's about 20 to 30 years, and then peaked then, and then hit a plateau after that. Naturally, all technologies get obsolete after a certain time, and then we have the TV, right? Notice at the very bottom of the curve, you would see at least about 5 or maybe slightly longer, that it was just flat. It was just kind of coming out of its shadows, coming out of its shell to face the world, and then it just went rocket, right? Just like a major crazy curve up. And if you look at the peak, maybe somewhere around here, that's about 50 to 60, 65 maybe, about 15, 20 years, yeah? And then we have internet. This is something more closer to us. A lot of you might not have seen life before internet. I've seen that part of the world. So it took about 10 years, I would say, slightly less than 10 years before internet became center stage, before everybody started getting onto it. And then it had a rocket pace of growth, as you can see. So I'm not sure if you've seen the end of it, but we've definitely seen lots of maturity in the internet now. And from 1995 to 2010, that's 15 years before we saw the full spectacle of it fold out to the rest of the world. And then we have smartphones. Yeah, smartphones, it says 2003, 2004 maybe. And then about 2008 is when it started coming out and lots of people started getting onto it. So maybe about 4 to 6 years before it had its break. And then the last 10 years has just been fantastic for smartphones. Again, it's getting very mature now, but you see that almost everybody has a smartphone. Almost everybody is getting onto these new technology. So let's put this in comparative to cryptocurrencies, to blockchain technology for that matter. I haven't spoken much about that due to lack of time, but this is a technology that will reform industries. There's going to be lots of disintermediation with blockchain technology, and one of the strongest beneficiaries of this adoption will be cryptocurrencies. No doubt about that. Yeah. So when we look at the last 10 years, I still feel that Bitcoin and cryptocurrencies and blockchain and whatever have you in this space is coming out of its shell, right? It's now getting noticed. It's now getting noticed by institutions, by governments, by corporations, by foundations, whatever have you. They are now starting to take notice, and they're starting to find ways to apply this into their existing framework. So now we are probably at the cusp of this being taken mainstream. In the next 10 years, 10 years is a long time, huh? In the next 10 years, 2030, for example, where will the price of Bitcoin be? Where will the price of cryptocurrencies be? I honestly think that $100,000 would be too small of a value that we could peg at for Bitcoin, say come 2030. What will the value of that be? I have absolutely no idea. But you can see where I'm going with the comparison of gold and the comparison of the market adoption of such new technologies coming in, that we still have a long way to go as far as the pricing of these cryptocurrencies are concerned. But please be safe, and please invest or at least participate in this carefully. And you don't want to be caught with too much of exposure. Invest in it wisely. My best wishes and congratulations if you have already made it in this. If not, if my best wishes that your investment will come out well in this, but please invest very, very safely. Go in with capital that you can afford to lose. That will help you with your mindset, and that will help you to hold this for the longer term. So maybe in the next 5 to 10 years, God bless, this will be a investment retirement portfolio that you could have for the rest of your life.
Okay, so let me scope this to the year 2021. You have talked about a longer horizon with regards to the Bitcoin prices and so forth. But what we are going to expect? What would we expect for the cryptocurrencies market in terms of market cap or in terms of the prices in 2021?
I feel that 2021 will be a very good year. It could be quite, especially for Bitcoin right now, it could be quite frightening to get in at this high levels. We're going to be pushing at 50,000 now already. That's a big psychological number. If you would like to get in, spread out your bullets. Go in with smaller exposure right at the top, and then maybe you can buy lower when price retraces and average your holdings. But 2021 overall, I think will be a very good year for cryptocurrencies. If we were to look this back, say end of 2021, I think we would have gone past this price value many times over, and this will generally drive all other cryptocurrencies as well. But select those that are liquid, select those that have good market cap, select those that are backed up by good teams and good projects. Please just don't go and blindly jump into every coin that is coming out, because once the excitement dies, once the big money starts leaving the scene, all these small cap coins will be the first to start struggle. So please just be careful about that.
Okay, so we have talked about the upsides. So we're nearing the end of this webinar, and before we wrap this up, I just want one last question to Seeni. Is that we talk about the upsides of 2021 is a great, exciting year for cryptos. What about the downside risk? You talk about the short term. You will advise or you will suggest to people to hold this kind of Bitcoin for a longer term. So that to me suggests that in the near or to a short term, there may be some kind of volatility. Do you foresee that it will happen in 2021, or it will be sometime later on, or perhaps few years later?
I'm very afraid to speculate on time, because time is something that we cannot contain. Price, maybe we could somewhat have a direction to it, but having to say that this will happen this year, it's a pretty difficult thing. But I definitely feel that retracements will happen. Definitely it will happen with this kind of level. It's quite euphoric already. You don't see any asset class going up from 20,000 to 50,000. That's already 150%. Without a retracement, without the pullback to its previous support level. So that's pretty frightening, if you ask me. So I would request that you be patient and have pullbacks before you get into the market again. Yeah, and going with capital that you can afford to lose. Sorry if I'm repeating myself, but that's something I have to absolutely insist on. Because lots of people over the last few years have been really burnt, and they cannot afford to hold on to it because of cash flow issues, especially with COVID and all that. Then they're forced to liquidate at really, really lousy prices. And now when the market has gone exponential, right, I'm sure they must be, very sad about it. And that's a very depressing feeling, because you were in all the while, and then when right at the point that the train was about to leave the station, you stopped and then you got out of it. So it's a bit disheartening. We're all human beings, we all have emotions anyway. So I've seen that in many, many different cases. So if you can, be ready to hold on for the next couple of years, and this will be a very sound investment. It'll probably be a historical event. It will be a life-changing event as far as your portfolio may be involved. And don't look at it every day. A lot of them, first thing in the morning, last thing at night, before they go to sleep, they check the prices. Don't look at it. It's going to be it's going to give you lots of stress. It's going to give you lots of anxiety. Don't do that, but hold on for longer term. And 10-20% of your portfolio, I think that would be an excellent size to keep.
Yeah. So to wrap things up, the keywords that Seeni have just spoken buy into, you will only consider buying with again with riskable capital, and at the same time hold it longer term so that you can sustain in the long run, and don't look at it every day.
Yeah.
Yeah.
And speak to your wife if you want to buy first.
Okay. Well, that's okay. That's a great advice. We have come to the end of this interview with Seeni. In the past 60 minutes, we have gained a perspective of the Bitcoin and the cryptocurrencies market for the year 2021 from a portfolio fund manager and a blockchain evangelist. Now, Seeni, just a recap, Seeni is involved in fund management, treasury operations, and a blockchain evangelist since 2017. He has deep dived into blockchain projects and into the fintech space. Be sure to follow Seeni. He can be followed at LinkedIn. I will post the LinkedIn URL in the video box, description box below, to keep up to date to what he's doing in the blockchain fintech space. With that, be sure to subscribe to TokenClan channel for more contents in the future videos. I'm Warren. Bye for now.